What we've got over here, that's the number of wallets that are currently in losses versus in profit. So this here is the profit chart. Currently, with the decline, of course, less wallets percentage-wise are currently in profit, only 70%. We can flip this, then we get this chart, right? The addresses that are currently in losses. What's interesting about this is that from one bear market to the next, it seems like the losses get a bit less severe. The US dollar drops, they are pretty much the same, but the percent of wallets that are in losses, they tend to decline. And so there is this potential line, right? Again, it's interesting how those trend lines tend to establish relatively well across completely different metrics. This again tells us that probably the bear market isn't yet over. We haven't yet reached that line. So more wallets have to get in profit in order for this to be a potential bear market bottom. Now, check this out. This is the Bitcoin hodl waves. How much of all of crypto is currently in wallets that have held Bitcoin for different durations in time? So that's for 10 years for the purple area here. It's for 7 to 10 years for the blue area, etc. Right? So we can see how actively is Bitcoin getting traded. If we just take the long-term Bitcoin, so we look at the Bitcoin that has moved for the last 3 years minimum, as in the holding period had to be at least for 3 years. If we look at that, we can see, first of all, long-term, there's more long-term investors, but we can also see how historically the long-term investors tended to only take profit during a bull run, right? So when Bitcoin hit a new all-time high, when it went higher and higher in price, that's when people took profit. And then when we were at the end of a bear market, the selling stopped, and then when we established a new positive momentum, the buying by the long-term holders came back. So that's interesting, right? The selling tended to only happen at the peak of a bull market, when the bull market was accelerating further and further. This is now different. Have a look at this. We are already selling since Bitcoin hit 60K. The long-term holders take profit much, much earlier this time around. And it's not clear whether or not they've already stopped selling, right? It's not clear whether or not we've already bottomed out. And so that's probably one of the major reasons why altcoin rally didn't happen this time around. The appreciation of Bitcoin was simply not quick enough because the long-term holders already started selling at around 60K. And up until 60K, we actually did have a bit of an altcoin rally, right? We did have the meme coin trading with Pump.fun. We did have Solana outperform quite a bit. But since then, the Pump.fun ecosystem slowed down, meme coin trading slowed down, Solana did not outperform anymore, and Bitcoin's performance also slowed down massively. And so that's the fundamental issue. The long-term holders are selling now much more quickly than they ever did. And that's then the big question, whether or not Bitcoin will long-term outperform. Will the long-term holders stop selling? Will they start to become bullish on BTC again? And if we've got still this risk in the market, I think it only makes sense to buy when the price is clearly cheap. I think it's only clearly cheap once we are below the realized price. Here's the long-term holder supply over time. And that's the final chart that I want to leave you with. The number of Bitcoin that was held by the long-term holders in the past, it tended to grow very consistently in line with how Bitcoin supply expanded over time, right? There was Bitcoin mining. But it seems like there is a turnaround finally. It seems like it's not that clear anymore whether or not more and more Bitcoin will be held by the long-term holders. Maybe some long-term holders are now taking profit for good, and maybe they're getting out of the system altogether. That's the big question. Will we have a new all-time high in the long-term holder supply holding? Or have we now turned around? Is 2024 the final break point? Because we've already seen how Bitcoin is having a very hard time outperforming the Nasdaq 100 over the last 5 years and outperforming gold over the last 5 years. So something might have fundamentally changed. We'll only know in the very long term whether or not Bitcoin can still long-term outperform. But I simply just mitigate risk. I'm currently betting on falling prices since momentum is negative. There is the copy trading vault where I can simply just copy trade whatever I do. And unless we're really at dirt cheap prices, I'm just staying on the sidelines, right? I don't necessarily have to buy dips in the hope for a recovery. There's money to be made in both directions. We can make money when things are crashing. We can make money when things are appreciating. We don't necessarily have to have a bullish bias on a particular asset class. We should be exposed net delta positive to all asset classes, but on a particular asset class, especially one that we know very well, it's okay to bet on falling prices while being long the other asset classes. Have the S&P 500 and crypto decoupled a few months ago? S&P went up, Bitcoin, crypto down. Yes, to a degree. It's always hard to say, right? So we can have a look at the following. So let's go to Bitcoin. Let's have the Bitcoin market cap at the top. Look at the entire history. And let's add the correlation coefficient of the Nasdaq 100. And let's set the duration of that correlation, because 40 days is not enough. Let's take a year, right? So that's 2 times 186 days. Let's also make this line a bit more visible. So here is that correlation coefficient. And this is the breakdown that we potentially consider. Is there a breakdown? Potentially, right? So when the correlation coefficient is at 1, that means the two assets move in the same direction at the same time. When the correlation coefficient is at -1, that means they move in opposite directions at the same time. When it's at 0, it means there is no correlation at all. The two assets are independent from one another. This is now over the course of 1 year. What we can see is that over time, correlation tends to increase, right? It tends to go up. The bottoms are higher and higher, and we tend to creep more often at the 1 level. So I do think that long-term correlation is going up. In other words, the two assets move more and more in tandem with each other. Can we already say that the assets have completely decoupled? Not necessarily, right? Because we have seen similar kinds of movements to the downside as well. What this here implies, right? If this support stays the way it is, what this implies is that the two assets will move in the same direction going forward. So if we expect that Bitcoin continues to go down from here as an implication of this chart, traditional finance should also rather sell off. But I don't want to make too many predictions from traditional finance, right? Traditional finance is very hard to trade. The competition is very high. But at least this metric here would suggest that the two assets will be more correlated going forward. If we suddenly see negative correlation again, right? If we don't see a positive coefficient here, but actually the two assets move in opposite directions over the course of an entire year, that would actually be very positive. I would actually like this a lot. And the reason why I would like this a lot is because this gives a good reason for traditional finance to diversify into crypto again. Because the traditional portfolio manager, right, that manages endowment funds, that manages high net worth individuals, etc., they are looking at data like that. They are looking at correlation coefficients. They might be blindly following Markowitz levels, right? They might be looking at what was the correlation in the last year, what was the relative expected returns. They might build a portfolio based on Markowitz portfolio theory. And if you've got very low correlation, that means an asset becomes more attractive as a diversifier in a portfolio. That will reduce the overall portfolio risk. And so that's a good thing. If we see Bitcoin, so that's the ideal case. We see Bitcoin selling off more and more. We see Bitcoin going below the realized price. At the same time, traditional finance does not sell off. We see a negative correlation coefficient that would very likely trigger traditional finance capital managers get into Bitcoin again. Because it's then the nice diversifier. It then shows that we have seen a decoupling. And that's great. That's actually what we do want. We want to have asset classes that are not correlated to each other, but that do over the long term at least appreciate with monetary debasement. If we think that Bitcoin appreciates with at least a 6.8% per annum, and at the same time it has very little correlation to the rest of the market, to say the S&P 500 or to the Nasdaq 100, then that's great. Then we can buy both and the overall volatility of our portfolio goes down. It will be less squiggly. We will just appreciate with monetary debasement. We'll get rid of the inflation tax. We get our purchasing power appreciation potentially over time, at least in terms of consumer goods. And that's actually the ideal case. That's the best case scenario. Will that happen? I don't know. Can we already say it has decoupled? Probably not. We're not yet in negative territory. But if we are going down as we expect, and traditional finance does not go down, which would be ideal, then Bitcoin becomes extremely attractive. Now, I've been talking about the realized price so often. We will be talking about this in this stream as well. So let me actually just get it here. This is the Bitcoin realized price. It's the average cost basis of the market. I talk about this in almost every video. And the best time to buy BTC historically has been when the average Bitcoin investor was in unrealized losses. Currently, we are at $54,725 for the realized price. Once we are below, it might make sense to do first purchases. We will not bottom out very likely at that price. We probably go below that, but if your time horizon is long enough, it makes sense to do first purchases. That's at least how I ride the market, and then just forget about it, right? If it even falls a bit further, if you go at 50K, at 45K, at 40K, we just buy more and more. That's my plan. So are we currently at the bottom already? I think there is no data that suggests this. This here is the monthly relative strength index of Bitcoin. The relative strength index measures how quickly we currently go up and down. It basically measures, are we currently selling off extremely quickly? Are we currently appreciating very quickly? And the idea is that if we shoot up too much or if we crash too quickly, that maybe we are outside of something that could be considered an equilibrium. And so we should then potentially buy when the RSI is low. We should potentially sell when the RSI is high. And so the monthly RSI is just a bit of a longer term measure of that. Now, why do I not say that we are particularly cheap here? We are obviously low on the level, but have a look at this. Over time, the lower RSIs tend to get lower even, right? We tend to have a negative trend. And so this suggests, again, that Bitcoin hasn't yet bottomed out. A very similar metric to what we've already seen with the drawdown from the all-time high. So the metric that we looked at the very beginning of the video, also when we look at this metric here, the 1-year rolling return, right? It doesn't suggest that we are already at the bottom. When we came from a top before, we tended to sell off longer. And the relative strength index, the monthly relative strength index, is just another way to look at the same data. Let me actually adjust this a little bit. Here you see the annual changes. So yeah, I don't see a reason to already buy now for the longer term. Of course, if you want to have some exposure, if your exposure currently to Bitcoin is 0, you should always have some, but that's just fundamental portfolio theory, right? We always want to have some exposure to all asset classes at all times, but we want to have more exposure as an asset class becomes cheaper and cheaper. And we might have slightly above average exposure to Bitcoin right now, but we should definitely have above average exposure once we are below the realized price, and then buy more and more. And again, currently I rather bet on falling prices since we are below the realized price. This clip was just a tiny moment out of a much longer value-packed video. To watch the entire episode, just press over here. Take your time. Looking very much forward to seeing you on the other side. Just press over here. Cheers!